Welcome to Invest. We're talking about investing, finance, and professional development. As the current time of 5:34 p.m. on Eastern Time, Ethereum to $2,750, that's about 6.5% so far. With respect to over crypto market, you see clearly across the board, we're down. Across the board, on average, I would say 8.5% if you stretch that out. And right now, the momentum is relatively bearish, right? Driven by three negative catalysts. One is the chairman or the vice chairman, if you may, of the Bank of England speaking upon the negative affectation that we're experiencing from the interest hikes, right? Obviously, it will cut into your profitability margin on both a corporate level, also on the residential level. Obviously something that we've been talking about on our channel, but I'm not sure about how, publicly aware is that among, public investors or retail investors driving the fear mongering that we've been having today, right? In addition to that is obviously with respect to the production number that came out earlier today, right, from the Labor Department of Statistics, obviously with respect to hitting that historical low again, on driving more, negative pressure onto what has already been a relatively sensitive market, right? We have been selling down, ahead of the FOMC meeting. Sell the rumor, buy the pressure, buy the news type of affectation, and as we got that relief rally, which is typically driven by retail investors, nothing has really progressed, right? It's just like we got the confirmatory signal, knowing that we are going to be worsening the interest from 25 basis point to 50 basis point. So all we did was basically confirming, but now you get sprinkled across with more negative news. And also with respect to news around potential delisting as well, that also butchered the Chinese high growth small cap stocks at the same time, like NEO and Xpeng down like 14-15% today. And also with respect to the tech rotation outward as well, just more fear mongering across the spectrum, like 4 or 5 negative catalysts across the board, driving the sell-off that we're seeing in front of us. And crypto get that direct correlation effects from the equity side. People just fleeing away, people selling on a loss for the sake of selling a loss because of fear. But it's not logical what we see in front of us right now. You know what I'm trying to say? So with respect to the technical, we are at the 2750, which is exactly where we're at right now. You can see that clearly we broke below to the 2678 earlier today, which is technically, just levitation. Is not a real level. The real level we have to go down, if we will go down, will be the 2500, right? Basically back to where we were back in March 13th. But how likely can that happen, right? Knowing the fact that we have crossed down for such a long time, we're fusing together at the same time on RSI is at the 41 out of 70, looking for resistance somewhere down below, which technically the next level of resistance should be somewhere around like 37.04 out of 70 on the RSI scale. So as we normalize, slowly recuperate back up, the market will look for more of a pressurized type of momentum to push it back upward. And I think today just a lot of negative media affectation, nothing really seismically or, nothing shocking. Let's just put it that way. It's just that the market has been weak in terms of, it's already like a soft wound that we have. But today we kind of punch the wound and then rip the wound and then put more salt and alcohol on it with all the other additional elements driving the pain that we're seeing right now. So it's not long lasting. Let's just put it that way. In respect to Bitcoin, down about 8% as well. You can see that clearly we broke below to try to get down to the 35,500. Immediately got bought up because we were extremely submerged at like the 30 out of 70 at that point, coming back up to 36,500. At the moment right now, you can see that clearly we cross up, cross down for a second, but you could see that we are relatively fused together. So do we see a large separation going down all the way to 34,500? I would say it will be unlikely because of how likely can we see more negative affectation. Like today we have 3-4, right? If you count like the Chinese delisting news to be a news as well. And if you want to sprinkle across like COVID, you want to sprinkle across like the war cultivating in Russia and Ukraine, that's like 6 negative news, right? But I don't know if those are like the direct factor. I think today was just like head on with respect to the the Fed's relief rally that is relatively weak, combined with just negative news that we have already talked about, the primary ones, right? So respect to Ethereum Classic, it's now about 6.5%, 2863 right now. Anywhere from basically 26 below is logically the DCA from here. And then Dogecoin is anywhere from basically 12 cents below is logical DCA from here. Cardano's at 80 cents right now, down about 11%. Anywhere from basically 75 to below is logical DCA from here. Solana down about 7.15% so far. At the moment right now, anywhere from basically Solana 85 to 75 below would be logical. So right now it's a buy right now in terms of the risk tolerance level. Respect to XRP, down about 6.88% so far. 59 to 57, right? It's a logical level DCA. Polkadot's down about 10%. Anywhere from current level down to 1405 is logical. Algorand's down about 9.3%. 63 cents at the moment right now. Anywhere from basically 60 cents to down to 50 will be logical. Right now, it doesn't look quite good because you can see that clearly we have crossed up and then crossed down, but it's not like a large one. But we are forming a relatively negative inertia of reversing back down at the 41 out of 70 right now. So yeah, waiting until it comes back down to like somewhere around like below 60 would be logical to DCA first. Respect to Shiba Inu is a buy right now. 2100, 1400 to 900 will be the frames. You can see that clearly we have been leaping down for quite such a long time. At the same time, it's at the 38 out of 70 right now. So as we bounce ideally from the low 2000s, which is where we're at right now, maybe somewhere touching around like 1800, 1500. But again, right, like 2100, 1400 to 900 will be the levels I would look forward to reframing to. And then with respect to MATIC, down about 10%, anywhere from basically current level down is logically DCA from here. AVAX down about 11.17%, 59 to 50 based on the risk management level. And with respect to Luna, down about 5% as well, right? I would say anywhere from 75 would be the first level I would actually think about incurring risk, which we kind of got to today. But if we break 75, right, 62, 52 to 45 from here, right? So based on the current risk management level, right, again, these are not predictions, these are the risk management levels. I think the risk management levels are looking fair, right? I think they're still levels in a fundamental perspective. And also on a technical perspective, it doesn't look terrible either, right? So if you triangulate both the technical, which is good, the fundamental is absolutely a steal right now. I think it's worth your shot to be buying around this time when everybody's screaming fear and when the fear index is extremely high. That's like the perfect time to be buying, not the time when everybody's being happy and like super, greedy. The greed index, if you may, which is the opposite of it, right? So appreciate you. Have a good rest of the day, and I'll look out for the next one. Take care. Bye.